Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Chipotle stock by analyzing their financial statement and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 79 billion market cap. They're trading at almost $2,900 a share, and they have 27 million shares outstanding. The stock price is so high because they never split, but they did announce recently they may have their first split, a 50-for-1 stock split. We'll talk more about that in a little bit. Chipotle is an international chain of fast casual restaurants specializing in bowls, tacos, and burritos, made to order in front of the customer. There are over 3,200 restaurants. It is one of the first chains of fast casual dining establishments. In their early days, when they had only 16 stores, all in Colorado, McDonald's became a major investor. That was in 1998. By the time McDonald's fully divested itself from Chipotle, the chain had grown to 500 locations. That was in 2006. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Look how much their free cash flow grew from 2020 to 2021, almost 200%. It was flat in 2022, then it grew to $1.2 billion in 2023, a growth of 45%. And their margins are improving. Their free cash flow margin is 12%, which means they converted 12% of their revenue into free cash flow. Net income is the profit or loss on the income statement. It's revenue minus expenses. That also grows each year from $350 million to $1.2 billion. And their margins improve each year as well. Their net profit margin in 2023 is 12%, so they converted 12% of their revenue into net income. Revenue is the sales for the company, and that grows nicely each year from $6 billion up to close to $10 billion. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's $54 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $47 billion. We divide that by 27 million shares. And we get a calculated stock price of $1,700. They're trading at $2,900, so they're trading at a 69% premium. It's a big sell according to the model. It seems like a lot of videos I've been doing lately are sells, not buys. But even though a stock split has no fundamental change in a company, psychologically, it does help people afford the stock. So I think there's going to be more buyers when the stock price goes down when they do that 50-for-1 stock split. The market cap will not change though, but each individual share price will be a lot cheaper. And you may think, why does it matter? Because you can buy fractional shares. I totally agree. Why does it matter? But it does. There are 53 companies in the same industry as Chipotle, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend $560 million in CapEx. Starbucks spends the most at $2.3 billion. McDonald's a little under $2.3 billion. CapEx is the investments in property, plant, and equipment. When they open a new store, that's a big CapEx spend because sometimes they buy the real estate. If they don't buy the real estate, they have to buy equipment. They're a bit leveraged, 1.3 debt to equity ratio. For every dollar of equity, they have $1.30 of debt. That is better than median average. They do not pay a dividend. I'm surprised. They probably will pay one sometime in the near future. They generate $1.2 billion of free cash flow. Not that much relative to their market cap. They're in a comfortable third place in their industry, a lot behind McDonald's. They seem a bit overvalued according to their price multiples. They're trading at 64 times earnings, 8 times revenue. Starbucks is trading at 3 times revenue because Starbucks generates so much revenue relative to anyone else, even McDonald's. Chipotle is a little under $10 billion, which is lower than Darden, also lower than Yum China. But they're still growing. Their 5-year annual revenue growth rate is 15%, much higher than McDonald's and Starbucks. Look at Luckin Coffee, close to 100%. If you were smart enough to put $10,000 into this company 10 years ago, After 5 years, you would have been in the red. You would have been in the red for a couple straight years. But if you still held on, you'd be at $50,000 today. That's an 18% annual return, a 400% total return. Here's a recent news article. Chipotle, one of the best performing stocks on the market since its IPO in 2006, has gained more than 5,000% and has never once split. That's about to change. The company announced a 50-for-1 stock split, which will be one of the biggest stock splits in history, because most companies do a 2-for-1 or a 3-for-1, not a 50-for-1. It's subject to shareholder approval, which I think it will get. So the split should happen on June 26th, so in 3 months. Let's take a look at the company's 10K. This is for all of 2023. Let's start off with their income statement. They show us 21, 22, and 23, and you can see nice revenue growth from $7.5 billion to almost $10 billion. Pretty much all their revenue is food and beverage. They do make a small amount of revenue from delivery, $68 million. What they mean by delivery revenue are the fees charged to customers on the sales made through the Chipotle app or their website. Below revenue are all their operating expenses. Their largest expense, of course, is the cost of food and the packaging. That's almost $3 billion. Then you have labor, payroll, which also includes employee bonuses, if they pay benefits like medical or dental, that's $2.4 billion. Occupancy, rent, $500 million, and other operating costs, $1.4 billion. If you're not sure what some terms represent, like what are other operating costs, you can just search that term. It includes marketing and promotional costs, delivery expense, bank and credit card processing fees, utilities, like electric and phone at their restaurants, technology costs, and maintenance costs. Then you have general and administrative expenses, $633 million. This includes the payroll for their executives, depreciation and amortization. They have to depreciate their fixed assets. If they buy property, they depreciate that property, $319 million. Pre-opening costs, $37 million. When they add another location, there are expenses to open that location. Impairments, $38 million. So total operating expenses, $8.3 billion. Operating income, $1.6 billion. That's almost exactly double 2021's number. Then you have net income of $1.2 billion. That has grown a lot year to year from $650 million to $900 million. Now it's $1.2 billion. So their EPS looks really good, $45 per share. That's more than most shares cost. And this is their earnings per share. And their decreasing shares, it was 28.1 million, then 27.9 million. Now it's 27.6 million. Let's take a look at their balance sheet. Current assets, 1.6 billion. Current liabilities, 1 billion. So they have a pretty good current ratio. 560 million of cash. And that's not just straight cash. 128 million is straight cash. 350 million money market funds, 77 million time deposits like CDs. Then you have accounts receivables, how much money their vendors owe them when they sell on credit, 115 million. 39 million of inventory. They're always going to have a lot of food product on hand. Prepaid expenses, 117 million. This is when a business makes an advance payment for a product or service they're going to receive in the future. Investments, 734 million. Most of the investments are U.S. Treasury securities, 731 million. So you could think of investments as cash. So they actually have 1.3 billion of cash, 560 million plus 730 million. They own a lot of fixed assets, 2.2 billion, and they lease assets. Sometimes they lease the real estate they operate in. That's 3.6 billion of leased assets. Total assets, 8 billion, up from 7 billion. Total liabilities, 5 billion. Their biggest liability is long-term lease liabilities, 3.8 billion. This is how much money they owe on their operating assets. Assets minus liabilities equals equity, 3 billion of equity. They raised 2 billion from selling their business. They bought back nearly 5 billion of their own stock. Treasury stock is a contra equity account. It brings down your equity balance. And retained earnings is how profitable the company is historically. 6 billion. Let's take a look at the statement of cash flows. Their operating cash flow is 1.8 billion. That's up from prior years, 1.3 billion in prior years. The way you calculate operating cash flow, you start your net income, 1.2 billion. You add back the non-cash items on the income statement, like depreciation, amortization, or stock-based compensation. Then you have to adjust for changes in working capital. That's how you get to 1.8 billion. In the investing section, they bought 560 million of PP&E, property, plant, and equipment, and they purchased 1.1 billion of corporate debt. 730 million of their investments matured. In their financing section, you can see how much stock they bought back, or if they issued any stock or issued any debt. They bought back 600 million of their own stock. Last year, over 800 million. They paid 69 million of taxes on stock-based compensation. In their financing section, they had a cash outflow of 660 million. Let's take a look at Simply Wall Street. The price of the stock is $2,880 a share, 79 billion market cap, up 5% in the past week, up a solid 77% in the past year. Let's see what they say about the company. Chipotle owns and operates Chipotle Mexican Grill. It sells food and beverages, offering burritos, burrito bowls, quesadillas, tacos, and salads. The company also provides delivery and related services through its app and website. It has operations in the US, Canada, France, Germany, and the UK. They were founded 31 years ago in 1993, headquartered in Newport Beach, California. It looks like they IPO'd in 2006 at $47 a share, and they pretty much only went up. You could have got it for $300 in 2018, it 10x since then. It was over $700 in 2015, so if you bought it in 2015, you would have been down about 50% after 3 years, but hopefully you held on. Now it's trading at its all-time high, close to $3,000 a share. Simply Wall Street values the stock at $1,800. They say it's 59% overvalued. 30 analysts priced this stock at $2,800. They say it's slightly overvalued. The revenue forecast for 2024 is 11 billion, 2025 13 billion, 2026 14.6 billion. The free cash flow forecast for 2024 is 1.4 billion, 2025 1.7 billion, and 2026 1.75 billion. According to Simply Wall Street, they have no debt at all. I guess the reason their debt to equity ratio on that chart earlier was 1.3 is because they consider operating leases debt. Simply Wall Street only considers long and short-term debt. You can see they have really high equity. It's 3 billion currently, and lots of cash on their balance sheet. This green line is their cash. It's currently 1.3 billion. The CEO's salary was 1 million in 2018. It's currently 1.25 million. Total compensation 17 million. Tenure as CEO is 6 years. In the past year, there's been lots of insider selling. One buy right here. So you can see in the past year, 877 shares have been purchased by insiders, while 17,000 shares have been sold. 93% of the company is held by institutions, 7% by the general public, and 0.7% by insiders. Vanguard is their biggest shareholder. The LA company Capital Research is the second biggest. Then BlackRock, T. Rowe Price, State Street, JP Morgan, Pershing Square. That's Bill Ackman's fund. Then you have Fidelity, Artisan, Alliance, Bernstein, Norges, the Norwegian Bank, Janus, Eaton Vance, TIA Cref, UBS, DE Shaw. Look at their employee count. It was 45,000 in 2013. Now it's 116,000. They employ a lot of people, a small city. And their ticker trades on the New York Stock Exchange, Deutsche Börse, Xetra, Mexican Bolsa, London Stock Exchange, Wiener Börse, Lima Bolsa, and Sao Paulo Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.